Hi, welcome to this week's MarketSmith Market View. Today, we'll break down what the market is doing right now, which sectors are showing leadership, and where we are spotting potential setups. The intent is to help you decode the signals beneath the surface and approach every move with clarity and discipline. Let's jump right in. India's benchmark Nifty 50 has moved into a confirmed uptrend after breaking above 25,670 to hit a new 52-week high. The index is trading well above key moving averages, reflecting strong bullish momentum. In this backdrop, early-stage bases with high relative strength and solid fundamentals are best positioned to lead potential gains. The market stays in a confirmed uptrend as long as price action remains constructive and Nifty holds above key support. Last week, the index slipped below its 21 DMA but held the downward trend line and is now attempting to rebound, hinting at stabilization. If distribution rises or Nifty breaks critical support, the outlook could shift back to uptrend under pressure. Watch 26,000 to 26,300 as the major breakout zone for new all-time highs and 25,300 as the key trend line support to protect. Let's look at how the sectors are moving. Major sectors: bank, financial services, metal, auto, pharma, and consumer durables are still in confirmed uptrend and trading above key moving averages. Nifty Metal continues to lead with the strongest relative strength, while bank and financials are consolidating near highs. Pharma, auto, and consumer durables also maintain a steady upward bias. On the flip side, realty, FMCG, IT, energy, and media remain in uptrend under pressure. IT and energy continue to struggle below their 200-day, and media is the weakest, down nearly 40% from its 52-week high. Overall, leadership is clearly in metals, financials, and auto, supporting a healthy but selective uptrend as sector rotation favors cyclical and rate-sensitive areas. Here are a few stocks worth studying this week. CSB Bank. The stock broke out of a cup with handle base on above-average volume, showing strong institutional interest. It is up about 3% from the pivot, with an EPA's rank of 80, buyer demand rating of A, and a rising RS line, signaling a constructive breakout with solid demand and momentum. SAIL. It is one of India's largest steel producers, manufacturing a wide range of steel products. It has buyer demand of A- and an RS rating of 82. It is trending well above all its key moving averages. ICICI Lombard General Insurance. It is one of India's leading general insurance companies, offering a wide range of products including health, motor, travel, and home insurance. It has EPA's rank of 80, a buyer demand of A, RS rating of 71, and is 12% to the pivot. GRSE. It is a leading shipbuilding company in India, specializing in the construction of warships and auxiliary vessels for the Indian Navy and Coast Guard. The stock is trading on a flat note, having reclaimed its 21 DMA on above-average volumes. It holds an impressive EPA's rank of 94 and a buyer demand rating of A-. APL Apollo Tubes. It is India's largest producer of structural steel tubes, with an impressive annual production capacity of 3.6 million tons. It has EPA's rank of 92 and an RS rating of 78. The stock is currently trading near its pivot area, hovering about 2% above its pivot price. So, how should investors think about the current market? You just have to follow these guidelines. 1. Keep exposure light until the market shows clearer strength. 2. Focus only on stocks with both strong fundamentals and constructive technical setups. 3. Avoid chasing extended stocks. Instead, wait for proper entries backed by volume. Above all, patience is key. Let the market confirm before making new commitments. That's a wrap for this week's MarketSmith Market View. Stay disciplined, study the market closely, and let the setups come to you. Thanks for watching, and see you in the next update. Information contained herein is not and should not be construed as an offer, solicitation, or recommendation to buy or sell securities. It is for educational purposes only. For more information, see our legal disclosure.